discuss the question of extending the payroll tax cut, dealing with unemployment insurance, dealing with compensation for doctors who treat Medicare patients, also addressing the question of the alternative minimum tax, and of course the other tax extenders as well, because this is a key moment for the country. As I expressed earlier, as Senator Thune was addressing the body, I personally do not believe that Keystone Pipeline should hold us back. This is something upon which I think we could get broad agreement. And especially if the language is as the senator is represented and as Senator Hoeven has assured me, that it permits the state of Nebraska to reroute that line so the Oglala aquifer is not endangered. It is, in my judgment, entirely in the national interest to get the Keystone Pipeline advanced. So that should not be the thing that hangs us up. As we look at things that are holding back the economy, unemployment remains far too high. The housing crisis continues. We have weak consumer confidence and demand. That really is at the heart of our ongoing economic weakness. Personal debt is still near record levels. We have tightened borrowing standards for businesses and consumers. I hear this very often, that even good businesses that have good track records at paying back loans can't secure the credit that they need to expand. And we have state and local budget cutbacks continuing. Madam President, as we look at the private sector jobs picture, there is some good news, because we have now had many months of expansion of private sector payrolls. In fact, if we go back here to 2010, in about the middle of the year, ever since then, we have seen private sector payrolls increasing to the tune of millions of jobs. So there is progress being made. And when we look at the reason there has been progress, I believe two of the most distinguished economists in the country gave us a background to understand why we are seeing this progress after one of the greatest financial debacles in our country's history. Alan Blinder, the former deputy chairman of the Federal Reserve, and Mark Zandi, who was an economic advisor to the McCain campaign, did an analysis of the federal government response to the financial crisis and the recession. Here's what they found. We find that its effects, this is TARP and stimulus, that its effects on real GDP, jobs, and inflation are huge, and probably averted what could have been called Great Depression 2.0. When all is said and done, the financial and fiscal policies will have cost taxpayers a substantial sum, but not nearly as much as most had feared, and not nearly as much as if policymakers had not acted at all. If the comprehensive policy responses saved the economy from another depression, as we estimate, they were well worth their cost. Madam President, we've got a debate going on in this country about economic policy. And our friends on the other side believe they have the answer, that they have the prescription. I would just remind those who might be listening that it was their policy and their prescription that led this country to the brink of economic collapse. They controlled the economic policy of this country for 8 years. And they put in place a series of policies that they said would dramatically expand job opportunities in this country and strengthen the economy. But we know what happened. At the end of 2008, I was in the meeting here in the Capitol with the Secretary of Treasury of the Bush administration and the chairman of the Federal Reserve. They told us they were taking over AIG, the big insurance company, the next morning, and they told us if they did not, they believed there would be a financial collapse within days. Now, Madam President, going back to the same tired, failed economic policies that put us in that position is a mistake, a profound mistake. Hopefully, we would learn from history. And I believe what is needed now is for America to act, to take steps to strengthen the economy in the short term, but to combine that with fiscal discipline over the mid and longer term so that we can get back on track, so that we face up to this debt threat. Two of the more distinguished economists in the country, in addition to the two I've already cited, have just concluded work for the Peterson Institute for International Economics. These are the Reinhardts, Dr. Carmen Reinhardt and Dr. Vincent Reinhardt. And this is what they concluded following severe financial crises. They found that economic recoveries are shallower and take much longer. Here's what they said in their analysis. Real per capita GDP growth rates are significantly lower during the decade following severe financial crises. In the 10-year window following severe financial crises, unemployment rates are significantly higher than in the decade that preceded the crisis. The decade of relative prosperity prior to the fall was importantly fueled by an expansion in credit and rising leverage that spans about 10 years. It is followed by a lengthy period of retrenchment that most often only begins after the crisis and lasts almost as long as the credit surge. Madam President, what they are reporting to us after looking at a long period of economic history and dozens of countries, that after a financial crisis, recovery takes much longer than is typical from a standard recession. Madam President, we now have a bill that is sent over from the House that I believe has serious defects. I believe that bill is a non-starter. First of all, the House leaders included extraneous provisions making it a partisan bill. President Obama has said he will veto it. Even the Senate GOP won't vote on it. So we have the curious circumstance that we have a bill sent to us by the House of Representatives, controlled by the Republican Party, and the Republican Party in the United States Senate won't permit a vote on the Republican bill. Now, one might ask themselves, why would that be? Perhaps the reason is they know there aren't many votes for it in this chamber, just as there weren't many votes for it when it was previously offered on this side. So, Madam President, more than just extending the payroll tax cut is at stake. We also need to extend unemployment insurance, and we need to fix the cut that is about to happen to doctors who treat Medicare patients. That's the so-called doc fix. And we need a compromise, not just partisanship, from both sides. Both of us need to find a way to come together. I've tried to indicate on this side a willingness to cross the partisan divide with respect to the Keystone Pipeline. Some on the other side have said that is important for their support for this legislation. I have said, at least speaking for me, that I'm prepared to support the Keystone Pipeline because I do believe it's in the national interest. Madam President, as we look at the effect of allowing the expiring payroll tax cut to die, this is what Goldman Sachs said to us. Should the payroll tax cut and extended unemployment benefits expire at the end of the year, fiscal drag will be intense in 2012. In other words, because there will be a reduction in demand in the economy, we will see lower economic growth, we will see lower job creation, we will even see a risk of returning to recession. Madam President, this is from Goldman Sachs, the U.S. Economic Analysis, what turns a stall into a slump. And they are telling us one way to turn a stall into a slump is to fail to extend the payroll tax cuts. and to extend unemployment insurance benefits to those who have been out of work for extended periods of time. That's not just the view of Goldman Sachs. I wrote a letter to the Congressional Budget Office that's nonpartisan, and I asked them for which of the policy initiatives that we could take would give us the biggest bang for the buck. And what they told us is number one would be extension of unemployment insurance. Why? Because the people who receive those benefits are most likely to spend the money. That means there would be increased demand in the economy, and that would give additional lift. Now, let me be swift to add. For those who are concerned about deficit and debt, I'm with you. Absolutely. Because our long-term threat is this growing debt. But CBO has told us in testimony before the Budget Committee, there is no contradiction between taking steps in the short term to give lift to the economy and taking steps in the medium term and the longer term to rein in deficits and debt. Madam President, J.P. Morgan Chase has said this on expiring payroll tax cut and emergency unemployment benefits.
We have a 10-minute time limit, and you have consumed 10 minutes.
Madam President, I'd ask unanimous consent for an additional 3 minutes.
Without objection.
I thank the chair and I thank my colleagues. This is what J.P. Morgan Chase said with respect to the expiring payroll tax cut and emergency unemployment benefits. For 2012, the more important issue is what happens to expiring stimulus measures. Together, the payroll tax cut and the emergency unemployment benefits have lifted household disposable income by about $150 billion this year. If they expire as scheduled, consumption growth early next year would be challenged. In our baseline view, the drag from tightening fiscal policy, including expiration of the payroll tax cut and emergency unemployment benefits, could subtract 1.5% to 2% from GDP growth next year. Since GDP growth is only forecasted at 2.5% to 3%, a reduction of 1.5% to 2% would be a dramatic reduction. Madam President, this is what Mark Zandi, the chief economist of Moody Analytics, said. If policymakers do nothing here, if Congress and the administration just sit on their hands and they do nothing, the odds are very high we'll go into recession early next year. We have a payroll tax holiday, all of us. We'd be in recession right now without it. If they don't extend that at the very minimum, we'll likely go into recession. Madam President, I hope very much that colleagues are listening. I hope very much that we are able to proceed to address this matter of extending the payroll tax cut and of extending unemployment insurance. I think I want to end as I began. If we had not had the government response in TARP and stimulus, Zandi and Blinder, two of the top economists in this country, one who was an advisor to the McCain campaign, one who is the deputy chairman of the Federal Reserve, have said we would be in a depression today. We would be in a depression today with 16% unemployment and 8 million fewer people having jobs. We ought to pay close attention to that advice. We ought to act on it. And we ought to do it together. We ought to find a way for principled compromise on both sides. Madam President, this body is bigger and better than we're demonstrating at this hour. We have the chance to prove to the American people that we are worthy of their confidence and that we are able to respond and do the urgent business of the nation. I hope we don't disappoint them. I thank the chair and yield the floor, and I thank my colleague for the courtesy of the additional time.